Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find this. Now, in this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence is recreated here on this daily chart and is the bright red 2009 to 2016 bullish shift pitch hawk. And the specific key piece is the bright red upper tine, currently at 13,406. That sits just above the top of the very recent market and has capped a number of significant thrusts higher seen in January and February and even very early March and last week, and this has been a superb resistance. Indeed, this is the key piece of overhead resistance, an only piece of overhead resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year, and that's the July 22 to January 23 showy bullish shift pitch hawk. So this leaves us with the question, what now? Well, 4 weeks ago, I said there were two possibilities, with one of them having a subplot and none of them really satisfactory. First was to look at the whole 2026 action so far as a complex top, and the best we had as a proxy for a neckline was the 50% Fibonacci line of November 25 to January 26 move at 12,571. The subplot to this was we also had a multi-bottom diamond pattern formed between late December 25 to the start of March 26. It was not an easy diamond pattern, though we did see prices drop down below the 50% Fibonacci line at 12,571 and achieve the primary targets below, if not the secondary harder to reach target further down. The second possibility was to look at the whole 2026 action as a possible bullish halfway hesitation, running from as far back as mid-November 2025 action. I said back 4 weeks ago, and I quote, "To be honest, this is even more unlikely, but I would be churlish in not mentioning it as a possibility." End of quote. And though prices are now once again up at the bright red upper tine, I do not credit this idea with the incentive to start such a move, and I will now consign it to the vaults. Thus we have finished most of one pattern idea and we're now in the hunt for the next. This, I believe, will center around what the market does at the bright red upper tine, which is where the market wished to go and is now arrived. LME 3-month aluminium. The market's break higher in early January started a move that continues till now. It helped at the time to identify a large pattern, not a very defined pattern, and has previously been breached on the upside and has been again through late March and throughout April as well. It is the breach but not yet fully broken, April 25 to date, very large, bright green, rising, expanding wedge pattern, currently 30.35 to 35.34. We have not as yet stabilized over the breached upper green trend line. However, on Friday last week, we did stabilize over another important trend line. This was a pattern that became evident to me when compiling my annual video commentary on my longer-term LME aluminium monthly chart, which you can find on the ADM ISI YouTube channel. It is a very large November 2015 to April 2020 bullish Andrews pitch hawk, which I have transposed onto this daily chart and highlighted in purple. The market has not started to stabilize over the purple middle time below, currently at 34.38, which was the base of support since late March. And for a while, it opened the door to looking at the whole mid-March to day action as a possible bull flag. However, this pattern has now been disrupted, but not before, as I said last week, and I quote, indicate possible potentials, not target, but potentials of seeing a primary potential has already been achieved in the 3606 area and a secondary potential in the 3808 area. End of quote. Thus it seems the primary potential has been enough for this pattern idea. This just left one other pattern, a more short-term pattern that I spoke about last week. A dark blue, late January to mid-March bullish Andrews pitchfork, to show perhaps the actual and more acute bullish angle of attack here. Now, I of course would be happy to morph this into a shallower bullish shift pitchfork for the same move should circumstances dictate such a move, but for now, the dark blue bullish Andrews pitchfork seems to be the showrunner here, with prices just underneath the dark blue middle tie and above, which is currently at 3604. For now, this seems to be the immediate pattern here. So, what do we have overhead that could possibly interfere with this idea? Well, in truth, not a lot. We have some highs from March 2022 up at 3660 and again at 3742, which the former helped cap the market last week, but there is nothing much overhead until the March 22 high, which is just over the top of my daily chart, 4073. I did add last week, and I quote, "It may be that if prices continue higher, then I'll have to draw some projected Fibonacci lines," end of quote. Well, excuse me, that time has come, and we have a 50% projected Fibonacci line up at 3761 and the 100% projected Fibonacci line at 3977, with a pair of lesser Fibonacci lines, projected Fibonacci lines at 3710 and 3812. LME 3-month lead. Back in January, the market tested up and failed at the 50% Fibonacci line of the May 24 to April 25 move at 2098. Indeed, I think this 50% Fibonacci line also caused the high seen back in November last year, as well as the earlier this year high. Since then, we've pulled lower, and in the process, the market created a small January-based head and shoulders top, breaking below the dark blue neckline, currently at 1982 in late January, and easily reaching the primary target, but taking its own sweet time to get down to the harder secondary target. However, in the process of taking its time lower, the market did create a bearish cat's ears pattern over February, and reached down to the primary and secondary targets for this pattern during March. Interesting, that was actually mainly done just over 2 days. We've since overshot on the downside, but in mid-March, prices developed a bullish reversal pattern, a horn bottom over 3 sessions that started a pullback up. This pullback upwards started a run into some pieces of resistance that had now become supports. The first piece was fairly static, based around the lesser Fibonacci line at 1939, which caused the low back in December last year. This was pierced 2 weeks ago and fully pushed up through last week. The second is more dynamic, as it was the green short medium moving average, currently at 1944. The market punched up through this earlier last week and then actively used it as a base for a further attempt higher, as recently as yesterday. The third was the bright red neckline, currently at 1967 of the August to December 2024 head and shoulders top pattern. This had acted as an attractor during February, plus a little higher up we have the 50% Fibonacci line at 1971 for the whole of the 2025 move. And then the flatlining mauve medium moving average, currently at 1974. Well, yesterday we closed over this bright red attractor, neckline for the first time since late February, after having pierced it over the last 3 days of last week. Yesterday also saw prices right on the mauve medium moving average and over the 50% Fibonacci line. Today we have used that bright red attractor neckline as a base for a push up through the 50% Fibonacci line and the mauve medium moving average once again, and this time test something I mentioned right at the start of this commentary, the dark blue neckline for the January based head and shoulders top, currently at 1982. We have pierced this, but as yet no closes at or over it. However, this does not leave the question what next on the upside. It does leave that question. The obvious ones are the slowly declining gold long moving average, currently at 1990, And the congestion between the 2001 to 2003 we saw between those two levels, which was an attractor for a significant portion of last year. However, the recent mid-March base action has also left the door open for two possible patterns, both dependent on some of the same details. They are a mid-March to date possible ascending expanding wedge pattern, currently 1930 to 2008, or it's an and or a possible bull channel, currently 1930 to 1986 for the same period. Neither are highlighted on my daily charts yet, but the ascending expanding wedge pattern seems more secure right now than the possible bull channel. That brings me to my final point, and it is a point I've been making here since the start of 2025 and will continue to do so going forward. You see, at the end of December 2024, we saw that the market had created a very large and rare annual key reversal down. In LME 3-month led, so it's unusual in that respect. Since then, well, we haven't done that much, and indeed prices are only about $20 higher today than they were at the end of 2024. Now, this is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now, with prices where they are, that one should still look at all these things, all things going forward, in this year and beyond, here, in this metal, in the shadow of this longer-term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.